Mid and small cap funds are known to deliver significant returns in the extended periods given the growth potential of smaller companies. But this one category of mutual funds has outshined the mid cap funds and small cap funds category by huge margins. While the mid cap funds category has delivered an average return of 47% and small caps 45%, this other category has given whopping 67% returns in the last 1 year. And this other category of funds I'm talking about are the momentum mutual funds. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance and investments. This video is going to be all about the momentum mutual funds. What are these funds? What is their construct? How are they selected? How have these funds performed? And lastly, are they suitable for you? So let's begin with an introduction to these funds. In simple terms, momentum buying means purchasing a stock which has seen a rise in prices in the recent past and is likely to continue its upward momentum going forward. This strategy of investing requires frequent changes to the portfolio so that you are always invested in the stocks that are in momentum. Now, given the rally in the stock market over the past few years, this strategy has become quite popular. Given the popularity, mutual fund houses launched funds which follow momentum style of investing as well. Now, such mutual funds are called momentum mutual funds. The first momentum fund was launched by UTI in 2021 called UTI Nifty 200 Momentum 30 Index Fund. It is a passive fund that tracks the Nifty 200 Momentum 30 Index. This index was launched in August 2020. Currently, there are 16 momentum mutual funds, out of which 14 are pure momentum funds. And the remaining 2 are multi-factor funds which focus on a combination of momentum and quality. Now, out of the 14 pure momentum funds, 12 are passively managed funds and the remaining 2 are actively managed funds. So, in this video, we'll look only at the 12 passively managed pure momentum funds. The list is on your screen. These funds together manage over 7,600 crore worth of assets. Interestingly, 10 out of the 12 passively managed momentum funds are tracking Nifty 200 Momentum 30 TRI Index. Now, Nifty 200 Momentum 30 TRI Index is the oldest momentum index launched in India. There are 2 funds from Edelweiss and Tata which are replicating Nifty Midcap 150 Momentum 50 TRI Index. Now, since Nifty 200 Momentum 30 TRI Index is the oldest and the most popular, let's get into the details to gain better knowledge about momentum mutual funds. Now, as the name suggests, this index comprises the top 30 high momentum stocks chosen from the largest 200 stocks listed on NSE. Now, since these stocks are selected from top 200 companies, they can either be large cap companies or mid cap companies. But why so? The Securities Exchange Board of India, SEBI, defines the largest 100 companies in terms of their market cap, means the size, as the large cap companies. Next, 150 companies in terms of their market cap are termed as mid cap companies. So when we talk about the top 200 companies, it will be a mix of large cap and mid cap companies. Now let's briefly understand how these high momentum 30 stocks are selected. Well, the stocks are selected on the basis of their momentum score. Momentum score is calculated based on the past 6 and 12-month returns of the stocks after adjusting for volatility. And the stock weights in the index are finally based on a combination of stocks' normalized momentum score and its free float market capitalization, that is the size. So look at on your screens. Out of a universe of Nifty 200 companies, these 30 highlighted companies formed the Nifty 200 Momentum 30 Index. Out of these 30 companies, the top 10 holdings in the index constitute more than half, that is 54% of the portfolio of the index. As you can see in the table, Hindustan Aeronautics, a government-owned aerospace and defense company, is the top holding, followed by Trent, which is a Tata Group retail company. So if you have ever shopped from Westside, Zudio or other companies on your screen, well, they all are a part of Trent. To give you some idea about their performance, so the top holding Hindustan Aeronautics have gained 188% in the last 1 year as on April end 2024. In the last 5 years, it has grown by over 1200%. Similarly, the second biggest holding Trent has seen a price rise of 220% in the last 1 year, and it has grown by over 1100% in the last 5 years. The top 10 stocks on an average have seen a price rise of 170% over the past 1 year. Now, before we move forward, remember that most of the funds in the category are new and only some have completed 1 year of performance. So let's compare their performance with Nifty 50 TRI, Nifty Mid Cap 150 and Nifty Small Cap 250 indices. As you can see on your screen, the momentum funds have clearly outperformed the large, mid and small cap indices in the recent 1 year period. So obviously, these funds may seem to be tempting and irresistible to most of us. But now is the time for the big question. Should you invest? Or let me rephrase the question. Who should invest in them? Looking at returns, obviously these funds have done pretty well so far. But we can't forget that these funds have a limited history. Most funds are around 1 year old, therefore they are yet to see a full market cycle. We are yet to see their performance during downward market conditions. We would say that a fund should have at least 5 year history or even longer to prove its consistency in performance. We would suggest, if you want to invest, start with small allocation and see how they perform and increase exposure over time. Remember, they can be risky. After all, they may need frequent changes to the portfolio so that you are always invested in stocks that are in momentum. And this brings us to the end of this video. If you liked it, subscribe to our channel and share the video with your friends and family as well. And we'll see you with another insightful video soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.